Yeah, good morning, guys. This is Mr. Walls, and you're welcome back to Software FX Academy. This is part two series of how to trade demand and supply zones like a pro. And like I told you, I'm going to be sharing with you how to identify the right demand zone in the market, how to identify the right demand zone. And, I'm not going to take much of the time. I'll just be hitting the nail on the head. I'll be going straight to the point without taking your time at all. I'll be very concise because I want the video to be very short. I don't want to take much of your time out there. So how do you identify the right demand zones? I identify the right demand zones. There are things you should consider, and that is where we have uh, and that is where we have our premium pricing and our discounted prices out there. And okay, let me just take you into the diagram I have on my chart at the moment. We have a point of equilibrium in the market, a point of equilibrium. And a point of equilibrium is a midpoint in the marketplace. It's a midpoint where prices neither cheap nor costly. I like to use live examples a lot. Assuming you want to buy a gadget in the market, you want to buy your iPhone in the market, and probably the price started from around 10,000, just citing an example, around 10,000, and it moved to, let's say, uh, 30,000. 30,000 in this regard can be referred to as the premium price. Then when the price is eventually dropping and it gets to like 15,000, that's a kind of, okay. Okay, let me say the price moves from 0 to 30,000 in the market. When it eventually gets to 15, that's the midpoint in the market. It is neither cheap nor costly at that point, but anything below that, you can refer to it as cheap, whereas anything above 15 can be referred to as costly. The same thing applies to the market. As only you have a move in the market and you want to take your trade, you shouldn't be looking to, this is a buy move. We all know, we all know if you have a bullish move in the market, a price moving towards the upside, that's a bullish move in the market, and that's a demand in the market. If you're looking to catch your buys, you shouldn't be looking to buy anywhere from here. You should be looking to catch your buys anywhere below the equilibrium, below the midpoint. And that's where our Fibonacci comes into play. This is just simply my Fibonacci tool that I made use of here. This is simply my Fibonacci tool that I made use of here. Okay, assuming this is the whole move, and I just use my Fibonacci to figure out where I will have my, okay, this way. To figure out my premium pricing area and my discounted pricing area. So the equilibrium, which is the 50%, you shouldn't be looking for. At this point, it is neither cheap nor costly. So you should be looking to catch your trade anywhere below the 50% area. And let me use my polyline. As only you have an impulsive move that has moved to the upside and there is a retracement, you should be looking to catch your buys, the continuation anywhere below the 50% area. And if you look at my Fibonacci, I have some areas that are, I don't call it the golden zone, or let me say this is the original golden zone, as the retail people refer to some areas as the golden zone. I have my own areas where I actually look out for. So, I use as a confluence to identify my high probability demand zones in the market. And I'll be showing you a real life example on VIX 75. You all know I trade the volatility market a lot. I trade currency as well, but it is applicable on currency. Like I told you in the previous video, that I'll do a lot of backtest on both currency and both synthetic indices and post it on my YouTube channel as well. So you can as well stay hooked up. For those that are coming here for the first time, kindly subscribe to this channel, enable the notification bell so that when valuable content like this are dropped subsequently, you'll be the first to, to be notified, and you'll be the first to be notified. So let's continue. Like I told you, I'm going to do a lot of backtests on so many pairs so that you know that this concept of supply and demand is applicable to almost, not almost everything you trade in the market, just like, your institutional candles as well is applicable to everything. Supply and demand too is applicable to everything in this market, everything in this market. So these are the levels which I have on my Fibonacci. You can as well take a screenshot, and, if you would like to use it, you can as well take a screenshot of it. So let's go to the live market and show you a premium, a discounted area in the market, a discounted area in the market. Now, okay. Okay, I think I spotted an area before now. Spotted an area. Okay, so this is a very good area in the market. Okay, let me bring up my Fibonacci. You can see VIX 75 here has been a bullish market. It has been trending up, and there's a kind of reversal from here. And I told you, when you are looking out for your reversal, I mean, where to take your entries, always look for a discounted area in the market. Always look for a discounted area in the market. I mean, a place below the equilibrium. That's where you should look for where to enter the market from. So let me bring up my Fibonacci. Like I told you, I just use it as a confluence in this market. As an institutional trader, this is the only tool, the only indicator I use in the market. The only tool. I don't do all those indicators anymore. For those that has been following me over a while, I don't do all those indicators. I trade the institutional way at the moment. Okay, look at the way these are lined perfectly. I told you, when you are looking for your buy, you don't buy in the premium zone. Anywhere above the 50% level is the premium zone. And look at what happened there. Price returned, I said, anywhere below the 50%. What did you say? It came below the 50% and the move continued to the upside. It came below the 50% and the move continued to the upside. So this is a very good demand area. Let me annotate it. This is a very good demand area. You can see for those that watched the first video, I told you rally, base, rally. This is a base here. And within your base, this is a rally base rally. This is a rally base rally. And within your base, I told you in this segment, I'm going to be showing you, your base is going to be very large if you are looking at it, to pick your trade. If you want to place your SL, just imagine placing your SL right below this zone. But, there are things I look out for as a confluence as well, right in the middle of the zone, in order to refine my entries, in order to refine my zones. And this one of the things I'm going to be showing you here. I look for indecision candles right within the zone. I look for indecision candles. Okay, look at it. Indecision candles. Oh, wow. Let me bring down my horizontal rate to mark it up. Okay, I look out for my indecision candles within the zone in order to refine my entries. This is a secret anybody out there won't tell you, but I've done a lot of researches on demand and supply, and I was able to come up with this. I look for my indecision candles right within the zone. In the case where you have a very large area and you are looking at, refining your entries and reducing your stop loss, just look for an indecision candles. It could be a red candle, it could be a green candle, just within the zone, indecision candle, and you see what happened. right within our demand zone. You know, we have a demand zone here. We have a demand zone, and it perfectly aligns with my discount area. Actually, this is my favorite area. I look out on my zones between these two zones. That's where I look out for my between 79% and 70.5. That's where I look out for that's my favorite zone. It depends. By the time you do your back test, and you could actually have your favorite zone. So, but you know, I have look at the conference here. I have a rally base. I have my base right within a discounted area, slightly below the 50%, and I have my indecision candle right within it. And what did you see price do? Price came right into the indecision candle, and the move continued. Let me show you another example just for you to know that we are not just guessing. We have done our proper homework, and we know what we are doing. Let me look for another zone. Okay. Let me look for another zone. Yeah, okay. Okay, I have another area, a very good area. Okay, I have a very good area here. A very good area. Let me mark my supply zones. This is in the case of a sell. This moment, this is the case of a sell. I just showed you a continuation of a buy. I'm showing you that of a sell now. I have my, in this case, this is even a very good example. You have more than one supply zone. This is a supply zone. You have your rally base. You have your drop base, drop base, drop. We are talking about supply this time. We have in this case, we have a drop base drop base drop. So we are looking to catch sales on this one. We are looking to catch sales. Look at it. We are looking to catch these sales. We are looking to catch these sales. So all you do is bring out your Fibonacci tool, where the move started, then where the reversal, start forming out from, where the reversal start occurring. And look at what happened. I have a very good sell from a supply zone. And what did you see happening? I told you I have a favorite places on my chart, on my Fibonacci tool. And I'll be showing you, I think this one aligns perfectly with my favorite areas. I want to have my demand and supply. I have my supply, you see, it aligns with my 79% and 70.5%. It aligns with my, you see, price came right into my supply area, and what did you see? The sell continued. The sell continued. And I told you, remember I told you, you look for in order to, this is a very large area. This is a 1 hour time frame. This is even a 4 hour time frame. So this is going to be a very large area. You just come into place your stop loss right above this zone. But in order to refine it, I told you, come into the zone, look for your indecision candle. You all know during the retail trades, during the retail days, we all read candlestick Bible, and we know what an indecision candle is. That's a candle that has a small body, then wick above and below it. The body is just very small. This is an example of an indecision candle. This is an example of an indecision candle. So I told you, I'm just going to look for my indecision candle and mark it up. And that's how I refine my zones. And my stop loss will be right above it. And look at what happened. Price returned back into the supply zone, right within my indecision candle. And what did they say? Price fell off from there, guys. We're not joking on this channel. We are for real on this channel. We've done our proper research before we bring anything online for you. If you actually like this content, if you like this value we are dropping here, don't forget to subscribe on our YouTube channel. And you can as well support us further by dropping it on your social media so that other guys can as well benefit from it. And still, don't forget to return back to this channel because, like I said, I'm going to be doing a back test on so many pairs. Maybe probably if you have a favorite pair you trade and you want me to do a back test of demand and supply on it, you can drop it in the comment box and I'll definitely do that and drop the video here for you to see that this demand and supply, it works across board. There's no gimmick about this thing. We are just doing what we know how to do best. Thank you for coming once again. I'll see you later. Bye for now. Yo guys, this is another very good example of a supply zone. I told you I have a favorite zone on my Fibonacci that I love to see my supply zone. Whenever I see it there, it serves as a confluence. Okay, now let me show you. V101S has been a bearish move on the weekly time frame. There's no weekly time frame here. I would have shown you it has been, creating lower highs, lower lows on the weekly time frame. So the whole V101S is a bearish move. There is a bearish sentiment on it. Now, this is a 15 minutes time frame. Let me show you what I mentioned that my favorite zone where I love to see my supply or demand zones. Look at this place. This is my swing high. So I'm taking my Fibonacci from my swing high to my swing low. I'm taking it to my swing low. Now I'm on my swing low. Look at what happened there. I told you I love to see my zones, coinciding with my levels on Fibonacci with my 70.5 and 79% levels on Fibonacci. And look at what has happened there. Very perfect. Very perfect. Look at my stop loss area, very tiny stop loss, and look at my take profit area, my reward area. And what I'm targeting here is that, see, we have a double bottom here, equal lows, equal lows. I'm a smart money trader. I combine smart money with supply and demand zones. Look at equal lows. There is money seated there. There is money seated here, below. If you have watched my video on liquidity before, you're going to understand what I'm talking about. So if you have not watched my video on liquidity, please check on my channel. You're going to see it there. Equip yourself with all the knowledge you need to equip yourself with in order to, be a smart trader. So there is liquidity below here because here people are the retail people that trade the retail concept, they are looking to buy here and their stop losses are below, and people that are looking to do breakout and retest as well, they are in this area. And that's why I'm targeting this area, because there is money here and this is my supply zone. And I told you right within the supply zone, you should look for indecision candle. That's indecision candle, something like a doji. And look at my zone here. Look at where I marked. Look at where I marked my blue and my black horizontal line. Look at it. Look at the doji candle. Look at the doji candle. And look at where price has coming perfectly and start reacting from there. And look at my Fibonacci level. Look at the confluence. First and foremost, what you look out for when trading a supply and demand zones, when you're looking to validate it, it must break. There must be a break of structure, and that's what we have here. I have a break of structure here. Price traded down, created a liquidity area that will eventually attract price down to, to give me a continuation move of the bearish sentiment I have on higher time frame. And look at what happened. Price reversed perfectly into my supply zone. I love to name my supply and demand zones. I love to name them Q zones. I got this from one of my mentors back then when I was when I started Forex back then. So I love to name it Q zone as well. And look at what price has did. Traded perfectly into my supply zone and is reacting off. Presently, we are in this trade on my VIP channel. I called it, we're in this trade, and I'll as well show you the outcome of the trade after eating TP. After hitting TP, I'll show you the outcome of this trade as well.